Welcome back to another episode of the IRA Cafe podcast. My name is Jasmine Trocchia, and I'm the head of the marketing department at American IRA. And today's episode, I am joined by none other than the fabulous Jared Benson from Clotine Capital. Hello, Jared. Thanks so much for being on the podcast.
Yeah, thanks for having me, Jasmine. It's a pleasure to be here and excited to get to connect today.
Fantastic. So you've been on a couple of our live events, and I just love your collection behind your head, but we'll talk about that in a minute. Why don't you introduce yourself to the audience, who you are and what do you do?
Yeah, my name is Jared Benson. I am a capital manager with Clotine Capital. So we are a self-directed fund, which basically just lets our investors pick which investments they want to participate in rather than having us allocate their money for them. So it's been a fun thing to do, and I have actually really enjoyed being on y'all's investor roundtables as well. It's been a good group of people.
Yeah, so our Investors Roundtable is a virtual networking event where we give a forum to investors, investees, people who are curious, who have questions, who can answer questions that American IRA can't. Whereas American IRA is not an investor, we are not an advisor, can't tell you what to do with your money. We can invite people like you to come on and ask and answer those burning questions. So what is it you do at Clotine Capital? You said it's a self-directed fund, but what does that mean?
Yeah. So I partnered with our fund manager maybe a year and a half ago. And really the vision for Clotine was to kind of create a mini marketplace where investors could come in and have a couple of options of investments to look at that would be reliable, they would be low risk, staying safe, and you can't say no risk. But our goal really is to have really risk mitigated cash flowing options that allow investors to pick what they want to pick from. And that's where kind of that self-directed is. We're not a traditional fund where we're just saying, hey, we're going to give you maybe an 8% return and we're going to, the 2 and 20 type model. Our investors get to pick where their money participates, and it only participates in that. So if they want monthly steady cash flow and they don't want to participate in development projects, which are very different risk profiles, they can only participate in, monthly cash flowing projects. And if they're like, hey, you know what, I want to take on a little bit more risk and go for that larger return, they can allocate their money there. And that way it allows them to pick and choose. And so I find it really resonates obviously with your clients as well, because they've already decided they want to take investing into their own hands. Maybe they want to de-risk out of the stock market to some degree, some percentage they want not there. And it allows them to start to self-direct some of their investments that are already, vetted and kind of in a legal structure that's SEC compliant and all that stuff.
Wow. Yeah, fantastic. It does sound that's like it's right up the alley of a self-directed IRA investor. Somebody who wants to take charge of their own investments and knows what they're doing. But let's talk a little bit about you. So, how did you come to Clotine Capital?
Yeah, so my background is actually in single-family real estate. And so I've been a real estate broker for a number of years, developed a business that really I served a lot of friends and family and then repeat clients. And so my goal is not to be opening doors when I'm 70, right? So I also had a lot of clients who would reach out to me and say, hey, Jared, I really want to invest. And the only two things that a lot of normal individuals, right? If you're already playing in this alternative investment, self-directing world, you realize how big this world is. But if you're not in it yet, a lot of times people think their only options to invest are going to be the stock market and single family rentals. And single family rentals, I'm a real estate broker. As much as it would benefit me for them to buy those homes using me, they're really not the best investment option for a lot of people, right? Especially in the market that we're in. So you have 6, 7, 8% interest rates on investment properties. So cash flowing is really, really, really hard to do with single family rentals right now. And unless you're going to do it at scale, paying management fees really can sometimes make you negative right now, or even more negative. And a lot, like I have doctor clients, they don't want to self-manage. They don't want to get a Friday night call at 10 o'clock that the toilet's backed up on their rental that's making them $100 a month. It's not worth their time. So I saw an opportunity, not only for myself to diversify, what I was doing and how I was helping people, but an opportunity to help those people who were already coming to me and saying, "Hey, Jared, we want to invest." The problem was their only thought process was single family real estate or the stock market.
How long have you been in real estate?
About 8 years.
Oh, okay.
So got my broker's license about 4 years ago, ran my own brokerage for a number of years as well.
Is that what you wanted to be when you were a little boy?
No, it's not. It's not. I think like 50% of all little boys, I wanted to be in law enforcement, U.S. Marshal, FBI agent, anything like that. I actually got my degree in criminology and criminal justice.
Oh, wow.
So that was the goal until I was about 21.
Oh, okay. And then reality hit and you were like, I can make lots of money doing this.
And I worked for a construction company I worked for a nonprofit for a year after college, then worked for a construction company for 5 years, which really benefited me in the real estate world because in Texas, where I live, we have a lot of foundation issues. So homes that settle and you start getting cracks and twists and turns in the house, and worked for that company for 5 years. And then that knowledge just benefited me while I helped my own clients buying and selling their houses.
So are you based out of Texas now with Clotine Capital and all of that, your new ventures?
Yeah. So personally, I live in Texas. The fund manager's in Florida. One of our asset managers that runs a business is in New York. And so we're kind of decentralized. We have a couple of investments going on in North Carolina, Alabama, and Wisconsin.
Oh, okay. Fantastic. North Carolina. Love it. Love it.
Yeah, it's awesome. I did not realize how hot that housing market was until we had this project going.
Yeah. I would venture to guess you're probably working in and around Charlotte because that seems to be the hot market in North Carolina right now.
We're actually outside of the Raleigh-Durham metro.
Next guest.
Yes. So it's that whole like metro area. And when you combine them, I think like Raleigh and Durham are separately on like the top 5 housing markets in the U.S. And so when you combine that, I think it's number 1. Yeah.
Wow. Oh, interesting. We're taking a look at for sure. How does your fund, going back to that sort of, conversation, how do you find the type of investments to invest in? Like, how do you find something that you could bring to your clients and say, this is a great investment? Or what kind of, I guess the other question would be, what kind of due diligence do you do on the investment options?
Yeah. So what we do as the fund is we actually, like, how do we find an investment is we find an individual who's really good at what they're already doing. They have a proven track record, a proven record of success. So for one of our investments, it's essentially a hard money lending company. So we found a guy who had flipped over, I think at this point, he's over like 250 personal flips himself. He'd already started to back out of doing the actual flips and was funding other real estate flippers, other real estate investors. And in order to help him scale, we brought him on as one of the investment options in our business. So a lot of your investors are probably already doing a similar investment strategy where maybe they're lending money directly to a specific flipper, like one house at a time. And so their money's probably out somewhere between 8 to 10 months a year, right? And with the strategy that we're working with, and Kurt is his name, that investment's called Carta Capital, but we're able to pay our investors, a return on a monthly basis year round. Because it puts him in the driver's seat of, I have to make this money work all the time because he's paying that interest to our investors, 365. So we find people who are really good at what they're doing and they're already in that space, and then we bring them on board. That's how we're doing it.
Oh, okay. I see. What are some questions that an interested investor should bring to you? Or I guess I could rephrase it. What are some frequently asked questions that you get from investors?
Yeah, so we get questions like, hey, one, what's the rate of return? We get, is there any way to increase that? Or is that the best you can do? We get, when do you start accruing that? And, or, kind of secondarily, when do we start getting paid? Um, we get some tax questions like, hey, is this a tax advantage investment? Can I leave my money in and maybe move this from an interest income category to more of a long-term capital gain category? And so I don't know if you wanted me to actually answer all of these as I go, but I'm just going to throw in questions out. Sorry.
No, that's good. I was really thinking more playing devil's advocate for the investor, right? So if
Yep.
I'm listening to this podcast and I'm like, "Whoa, what should I be asking if I'm thinking of going with this fund or thinking of
Yep.
working with Jared? What are some considerations I should bring to the table? Maybe that's a good way to put it. Like, what should a well-informed investor already know before they approach you?"
What should they already know?
Yeah.
Um, Yeah, so on one hand, I think there's just, understanding like, okay, well, what's the structure? Okay, so it's a fund structure. So one of the big differences from what I mentioned, some of your investors who may already be doing this, and they are directly lending. And so the benefit of directly lending to somebody is they can put their personal name or their checkbook, LLC, whatever that happens to be, whatever that structure is, they can put that actual entity on the lien of the property, on the deed of trust or whatever state they're in, and exactly the language that's used. Well, if they are investing in a fund, how is the fund protected? How's their investment protected when it's inside the fund structure? Because it's a different mechanism of funding those properties. And so there are pros and cons to that. So one of them is that, hey, your money's not attached to a specific property. If a specific property, there was some issue with it, you're not going to lose your investment. One of the cons of that is that your money's not tied to a specific property. Your name is not actually on the deed of trust or the lien or whatever mechanism that state uses. So your name doesn't show up on that actual document. It's the fund that has all those, and then you're invested in the fund. That's one of the big things I think is making sure people understand is that the structure of that investment is slightly different because it's going through a fund structure and they're not having to source individual loans that they're doing themselves.
Okay, interesting. Um, so thinking ahead a little bit, I guess like the inauguration was recently, and a lot of people feel very strongly one way or the other economically. Looking into 2025 and looking into the near future, what sort of trends or movements do you think will affect the type of investing that you're
Yeah.
involved in?
So we're all real estate right now, or 95+% real estate. So one is we're kind of doing some of the investment flips and lending, and the other one is a single family development. And I was paying close attention to this, especially during the election cycle, and it was interesting because at that time, and I think this will hold true as well, both candidates were talking about the housing shortage and about how they both wanted to provide incentives and tax credits. I mean, they were talking about offering tax incentives to builders to build. And that's on top of also, I think at one point, the Harris campaign may have been talking about like specific incentives for new home buyers. So at the time, both candidates were talking about injecting money into the real estate market, which people have different feelings about government involving itself in business. But typically what that does is it benefits that business. And so I think with Trump recently being inaugurated, I do think that we're going to see certainly not any negative impact in the housing market. I think the only impact we're going to see is going to be positive from this going forward.
Oh, well, I like that forecast. Let's go with that then.
Yeah.
Hopefully it
Now
turns
there's
out
all
that
sorts
well.
of other issues that could potentially impact the real estate market, right? Like, the high interest rates. It's not helping us right now. But when it comes to the new incoming president, I think he's going to do everything he can to get the housing market and the real estate market as a whole moving again. So
Good.
we'll see what that actually turns into.
Do you think that's the biggest? What is the biggest driving economic factor for the real estate market, though? Is it who the president is, or is it the Fed? Is it the IRS regulations? What do you think is the biggest driving factor for
Yeah,
what
you're
you do in
asking
real estate?
questions way above my pay grade, right? But from at least from my personal experience helping individuals buy and sell homes right now. So this is not Jared working with Clotine Capital. This is Jared, the real estate broker, feet on the ground, working with his friends who are trying to buy homes or trying to sell homes. And it's the interest rates. The interest rates have just really impacted people on an individual basis who, in the worst case scenario, it's people who bought their homes between like July and September of 2022, when the markets on the single family side really kind of hit their peak about mid-year and then just crashed immediately. So I have some clients who are actively trying to sell their home right now, and it's listed for $80,000 less than they bought it for 2 years ago. And that's primarily in interest rate, a reflection of that, right? Because the interest rates go up, your buying power goes down, demand goes down, and builders are still able to build right now. They're able to offer some good incentives to individuals. But those people who are selling like pre-owned homes or resale homes, they're taking the biggest hit.
That's unfortunate. Switching gears a little bit, I guess. But I asked this to the last two podcast guests, and I think I might keep this question because I think it's really interesting. Who has been the biggest influence on your career? How have they shaped your approach to investing or financial planning or business, your business perspective? Do you have like a mentor, a go-to person, or someone who's really like helped shape your career?
Oh, so if I go to like shape my career,
I got the hard
I think
questions,
I'm really
hard hitting stuff, Jared.
Yeah. So like, and I've always paid for coaching ever since I got into like being self-employed. I've always paid for coaching. But I have to say one of the biggest single influences in my career at like my life, the careers I've held or jobs I've held. And I'm lucky to say this, but it's been my dad. My dad's been someone who I've been able to go to when I had a question, when I needed advice. And when you were talking about how y'all are not allowed to give recommendations, right? I kind of joke because a lot of times I'll ask my dad for his advice and I can tell he is refraining from telling me what he thinks I should do or giving me any overt advice, and rather, trying to remind me about what's important to me or ask me questions about what's important. When it's, hey, what about X, Y, or Z? Or I'm thinking about doing this. Or he was also a self-employed CPA for 20 years. So
Oh, wow.
then I get the benefit of the financial side of understanding. I say I'm not a CPA, don't even pretend like it, but I just have a much deeper understanding of like the generics of how things are going to impact me or my clients, right? Because I have this resource that I've been able to go to for 35 years now. But he's been someone who I've always been able to ask for advice and get a solid thought process from him. And I've had other mentors. I've mentioned someone to you, Keith Blackborg has become a great friend and has really helped me in restructuring my thought process around my personal wealth and viewing managing my own money as a business, as opposed to just, well, it's all the money I have, yada, yada. It's not, well, you have like your vocation, your business, and your wealth should be viewed as a business and how you manage it and are proactive with it.
Fantastic. Love it. Love it. Outside of your professional life, what hobbies or interests do you have? Do you do anything other than real estate or money I know. I see those. That's where we're getting to the little figurines that are
Yeah.
back there behind your head.
So my wife might say I don't have any hobbies. But so I have three little boys, 6, 4, and 2. I've been married for just over 10 years now. And so the Legos are becoming a fun thing. So I love Star Wars Legos. I've always enjoyed Star Wars. So, that's where I've got these in the background. They were, since I'm using them as props for my videos, I expensed them. Since you're not a CPA, I don't want, you're not going to give me advice on that, but I got to have some fun with a business expense. And then my son, who is 6, loves Legos. So, and I think he has a medium-sized Millennium Falcon, and he's 6 and did an 18+ Lego set. Now I checked here and there to make sure he was on track, but he built the whole thing himself with some minor help from me.
Wow.
So me and my wife like to have friends over. We like to play board games. I'm kind of a closet nerd, and until you start talking to me, then you realize that I am actually just a nerd. It's just when you don't know me very well, you don't realize it.
In the closet part about that.
No, not this. No,
in a good way.
No, yeah. So no, that's some of the stuff that we like to do. And as the kids are getting older, we're starting to pick up some more stuff. So I'll be looking forward to the hunting hobbies I get with a bunch of little boys at some point. But that's a long ways off. I'm not wanting to take a 6 and a 4-year-old out in the cold, 4 a.m. type stuff. So.
Right. Yeah. Oh, that's so sweet. So what kind of, those are only 6, so they're not really handling money, but what kind of money advice would you give your sons?
Yeah. And I think I'd probably take this from my parents. My parents did a really good job of we got kind of an allowance, and then, it was like literally, all right, you're going to put, this much money in a giving, this much money in savings, this much money in, your own spending money. And so when I started working for real and making actual money, saving wasn't a foreign thing to me. Giving wasn't a foreign thing to me that was really hard to wrap my head around. And not everyone has that value, and that's fine. But what I really want them to start thinking about is, and this is what I didn't get as well as I could have as a kid, was like that investment mentality. So I had kind of that basic groundwork of like, okay, give, save, and then spend the rest, or spend a certain amount. But really, I wanted them to like really think about, well, how can I make this money work for me, and how can I not just have fun with it, or not just use it in a way that's efficient, but how can I make the money work? And so, compound interest, or the fact that, I was running some high-end computers, and the high-end computers, maybe it only made me like $3 an hour, which doesn't sound like a whole lot, but when it makes that 24 hours a day, 7 days a week, 365 days a year, that adds up, because it's not a business hour working computer. It's a 24/7 working computer. And so even just like, okay, well, and even basic ROIs at a young age. Okay, if I put 10 or 15 grand into this and I'm making this, what does that mean? Is this a good idea or not a good idea? So I'm excited, and you get into the aspects of like, well, do they even want to participate in what you're doing as the dad? I don't know, but at least I want to give them all the information so they can make a decision themselves, right?
Yeah.
So I think moving transition is like, all right, I was given a good groundwork. I want to pass that on and then build on top of it.
Hey, there you go. I can get behind that parenting advice. That sounds great. So you mentioned your videos. Is it just for like Zoom calls, or like podcasts or webinars like this? Can viewers find you creating content somewhere? TikTok?
So, yes and no. So currently the content I create is around my real estate business, for like the local area I live in. So not really super beneficial unless you're looking to move to Texas, then look my name up. But I am about to, my goal is to do something maybe a little bit similar to what you're doing, where I literally, and I think you're kind of doing the same thing, and I think it's a great idea. And I was batting the idea around, and you're like, I'm going to do this. And I was like, oh, I know I should be doing this, right? And it's just to interview, syndicators, general partners, get some investors on who maybe they're just limited partners in everything they do. But what if they learned the pros and cons? And so maybe we can trade lists back and forth occasionally. But really learning from people's losses, I think is a great thing, right? You can learn from your own experience, or you can learn from someone else's bad experience. And I'd rather do that than I've done some of my own negative learning. But that's kind of the goal. I really just want to provide content similar to you. I'll be the host. I won't be bound to not give my own opinions on anything. So that'll be a little bit easier for me, right? So
yeah.
But a similar idea. I really like what you're doing and putting on.
Thanks. Yeah, I'm super excited. But that's, I'm a content creator at heart, have been for a couple of years. So is there anything in the last few minutes of today's episode that you want to make sure that you impart to the listeners, or anything that we didn't touch on that you want to make sure we announce or give credence to?
Yeah. No, I mean, I've had a good time. Thanks for letting me share. If anybody does want to connect, it's Jared at clotinecapital.com. I think, y'all threw up the LinkedIn profile, which I'm terrible at, but I would say, just as you mentioned, being a content creator, it's a lot of work, right? And you're currently doing it, so it's a lot of work. I know it's a lot of work because I'm doing it in another avenue. I had a podcast a number of years ago that I think I got like 18 episodes in, and it just I couldn't keep going. But I have only ever seen, if anyone is in the business world, or maybe they're running their own business and they're self-directing, and maybe that's why you're listening, but you also have a business. I've never seen content creation not benefit me somehow. And so totally unrelated to the majority of your listeners right now, but if you are running some other business avenue, content creation is only going to help you.
Yeah, and I agree with that completely, 100%. Well, thank you, Jared. Thank you so much for joining us. Check out Clotine Capital. If you have any more questions, you can reach Jared, and I'm sure he'll be happy to answer them for you. Thanks so much for joining us. We'll have to have you on again. So
absolutely.
That would be fantastic.
Happy to talk about some of those business losses I've had, at some point. So
yeah, sounds like another episode. Well, thank you so much for joining us.
All right. Thanks, Jasmine.
And now it's time for the IRA Cafe Q&A. This is where I answer a question from one of our listeners. And today's question was sent to the marketing@American IRA email from Tom. Thanks, Tom. I appreciate your question. And Tom says, I know what an IRA is. I know what a traditional IRA is and what a Roth IRA is. But what makes that a self-directed IRA? And that seems like a really easy question, considering that we're American IRA and that's what we do is self-directed IRAs. But what makes an IRA a self-directed IRA is that rather than the money that you contribute to your IRA, other than that being invested in stocks and mutual funds and sort of traditional assets, you can choose to take that money and invest it in alternative assets. Now, there is a long list of alternative assets on our website at americanira.com. And so if you think of anything that's not necessarily traditionally stocks and mutual funds and other types of investments that you can make, that's what makes your IRA a self-directed IRA. And you tell your money how to work for you. So there's a lot of information, much more than I can answer in today's segment. Thanks so much, Tom, for your question. And if you have a question for our Q&A segment, you can ask that question at marketing@americanira.com.
American IRA, LLC, a North Carolina LLC, acts as a third-party administrator for New Vision Trust Company, a state-chartered South Dakota trust company. As a neutral self-directed IRA administrator, American IRA does not recommend or endorse any investments, individuals, or entities, including financial representatives, promoters, or companies. American IRA and the IRA Cafe are not responsible for other statements, representations, or agreements, nor do we evaluate the quality or profitability of any investment. American IRA does not endorse guests on the IRA Cafe podcast. Guest opinions are their own and do not necessarily reflect the views of American IRA, its subsidiaries, associates, or custodian. Participation in the podcast is voluntary and no compensation is provided. American IRA is not a fiduciary and cannot offer financial advice. Please consult your CPA or another professional before making financial decisions.